I'm Amanda Cassatt, and this is Endgame.
Every government agency wanted to put its boot on Ethereum's neck. Maybe only Bitcoin got a little bit of a pass.
What was the problem that you started Etherealize in order to fix? What was going wrong?
Wall Street's level of understanding about Ethereum was like bottom of the barrel.
In all seriousness, you think that ETH will flip in Bitcoin?
The entire global economy runs on Ethereum. ETH has durable economic security forever. Bitcoin has assurance of issuance, but not security. ETH has assurance of security, but not issuance.
What should people research if they want to understand this better?
There isn't a lot of literature about this. I think the crypto industry doesn't like talking about it.
You are one of the co-founders of Etherealize. What was the problem that you started Etherealize in order to fix? What was going wrong?
I believe it was July 21st last year, 2024. I was watching CNBC, which I don't do very often. That was a very special day because it was the day the Ethereum ETFs launched. I thought that this would just be a massive catalyst for ETH. There would be huge inflows, a huge amount of adoption and onboarding. You'd see Wall Street layer twos following shortly after. Obviously, that wasn't the case, right? In fact, there were net negative outflows from ETH due to the conversion of Grayscale. My friend James and I, who have been in ETH a while, saw that and were very disappointed. We said, WTF, what's going on here? We investigated the problem, diligenced it some, pretty quickly realized that Wall Street's level of understanding about Ethereum was like bottom of the barrel. I don't blame them. It's just that there was no one there to tell them about it.
What kind of misconceptions did they have?
It's not that they had necessarily misconceptions, it's just that they didn't even know. In the absence of like knowing anything, their natural inclination is to look at it like a tech stock. And ETH is not a tech stock. It's far more than that, and we can get into that later. That was the impetus for Etherealize. We linked up with Vivek, who's the CEO, and he has done an amazing job. He's a machine. Works 24/7. We reached out to Vitalik. He very graciously gave a signal boosting grant of 100 ETH, and that, sort of got us started.
So you're solving a problem in the world, which is that Wall Street institutions didn't understand Ethereum and ETH, but you're also solving a problem within our community. That there wasn't an organ or an engine at that point going out into the world and explaining ETH. Do you think that our community misstepped by not setting that up earlier? Do you think that we had the wrong priorities?
Completely, yeah. I don't want to be too hard on the community, though. I mean, we were...
or the foundation or whomever, it could be anybody.
Yeah, exactly. After FTX imploded, we basically endured 2 years of just insanely intense aggression from the SEC.
Operation Choke Point.
Choke Point. Every government agency wanted to put its boot on Ethereum's neck. Maybe only Bitcoin got a little bit of a pass, but every other network was just under endless assault. The natural inclination in that situation is to sort of bunker up, and I think that's a lot of what happens.
Say more. So shut down communications, not really go out to anyone, not spread any gospel.
Yeah, exactly. Precisely. And one of our co-founders, Danny Ryan, who shipped the merge, which was the shift from proof of work to proof of stake in Ethereum, was being intensely investigated by the SEC. They wanted to go through his devices. It was a lot, and it was very stressful. And as the election progressed and the political winds shifted about crypto, the investigations just got gradually lightened up, started to step back. And then one day they just said, hey, yeah, we're dropping it. Don't worry about it, which apparently they never do. Normally they just don't call you anymore. But for them to say we're dropping it, it's a very weird thing. So,
wild. I mean, I also noticed that the Ethereum Foundation lost their warrant canary.
Yes.
From their website, which is interesting.
Yeah. That was last year.
So as you bring these conversations about Ethereum to Wall Street, how do they go? What do you say?
Yeah, it's a great question. Well, Wall Street's a big place. There are many different actors. So there are the ETF issuers. And I think we're extremely aligned with them because we all want ETH to succeed. And with them, it's talking about Ethereum's narrative. Is value capture even important if it's a store of value? Is that even the main driver of its price into the future, things of that sort. When it comes to banks and financial institutions, some of them want to launch their own rollups. Those are very nascent conversations still, but they're very interested in that. You've already seen deployments like Apollo with ACRED, a very cool product. It's a private credit fund on ETH mainnet. BlackRock Biddle, of course, which now has billions of dollars in it. It's this money market fund that's integrated into all sorts of DeFi protocols. And then like Franklin Templeton, Janice Henderson just announced $1 billion deployment through the Sky ecosystem, formerly Maker. There's a lot of like application level, just like fund deployments happening right now. We've had some conversations about those, and those go great. We see ourselves as sort of an educational resource for Wall Street.
You clarify that this is not a normal tech stock.
Yes.
And that perhaps the value isn't a multiple of the revenue captured from fees.
Yeah.
What is the metric that you would suggest people should watch in order to understand whether Ethereum's succeeding or not?
It's a great question. Institutions like Robinhood deploying on Ethereum to trade stocks, are the network metrics going up and to the right?
Transactions.
So aggregate throughput, aggregate number of users, across every rollup. Is the total value locked increasing?
Across every rollup.
Across every rollup. Every rollup I consider part of Ethereum. They ultimately settle down to
So maybe
Ethereum.
You can clarify which of the L2s that we hear about are rollups, which work a different way, why you count them as part of Ethereum.
They're basically all rollups.
Right.
Yeah.
So a lot of people wouldn't count that as being Ethereum. If you don't need to send your transaction down to Ethereum to settle, then how does it benefit Ethereum?
Do you count Google as being part of the internet?
I don't think about Google or the internet that way. That's just not how I think about it.
L2s and Ethereum are extremely interconnected. Many of them do use Ethereum for data availability. They certainly use it for security. And the most important thing that I think people forget, and you see this with these burgeoning Bitcoin L2s, which, they say we're going to do roll-ups on Bitcoin. Well, then I meet these people and I say, okay, that's cool. You're going to give Bitcoin utility. You're going to build the global economy on Bitcoin. Awesome. What happens when the Bitcoin roll-up operator censors your transactions?
I want to get back to Bitcoin and the challenges of having a trustless roll-up or layer 2 or anything like that on Bitcoin.
If I could just make this one tiny point. The problem with that is that you can't exit your assets. And this is what Ethereum provides. It provides security if you're on a roll-up. It's why people have roll-ups. You have sovereignty over your assets. And that's the key feature.
Okay.
Sorry, please go on with that.
So let's say you're talking to someone on Wall Street that wants to measure whether they should invest in ETH, and they want a metric to measure Ethereum's performance that will correlate to whether they should invest or not. Wouldn't it be kind of hard to say that rollups should count in that metric for usage if the rollups never need to actually send transactions or pay fees to the Ethereum layer 1, because it's not like that usage is going to be captured in the revenue model? Do you see what
I
I'm
do.
asking?
I know exactly what you're asking. Yeah. So fundamentally, for the audience, there's this debate over what's called ETH data availability. They post their transaction data to ETH and they pay a fee to ETH, but some of them use what's called alternative data availability, where they use non-ETH networks to post their transaction data, and then ETH does not earn that revenue. And the only revenue ETH earns is this tiny, tiny little sliver of revenue called settlement, which is just some Merkle hash posted periodically on ETH mainnet, and it's very minimal revenue. So yeah, there's this construction called based rollups that I think are going to solve that. They're going to solve the revenue problem. I think even more importantly, they're going to solve the fragmentation problem. So right now, rollups are like the Balkans in the 90s. You have all these frenemy, ecosystems that they're all next to each other. They all get along, but they're all kind of competing. We haven't seen any wars yet, but who knows? And the reason for this is because they're competing over a pie of users that is growing, but also has some zero-sum components to it as well. With based rollups, what they'll enable is something called synchronous composability.
Okay.
And so,
gonna have to explain that one.
Okay, I'll explain synchronous composability. You're on rollup A. You want to buy a coin, a dog coin on rollup B. For you to do that today, you have to take your assets off rollup A, bring them back down to ETH, and put them back on rollup B.
Right.
Or use some other Rube Goldberg mechanism to get your dog coin. With synchronous composability, you won't have to do any of that. You'll be able to send one transaction on rollup A and in the same block be able to buy your dog coin on rollup B, assuming they're both based rollups.
Okay.
What that'll allow us to do is create abstracted wallet experiences where grandma doesn't even need to know what a rollup is anymore. And you just press a button and you get dog coin, and it's like ETH in like 2016 again.
How does that send more volume to the Ethereum Layer 1 mainnet? How does that increase the revenue?
It's massively positive sum for everyone involved. So first of all, it's a way better UX. If you do interviews with end users who, like, for example, say, I prefer Solana over Ethereum, a big thing you hear is that it's just, you don't have to worry about all this roll-up crap. Like, you just press a button and you get your meme coin. And it sounds very trivial today, but if you can imagine that with stocks or financial assets, then that's a real UX difference. When you're able to create this unified UX, it's a huge thing for the network. And back to the revenue question, it also drives revenue to the L1.
All of these transactions on the L2s, so on Base, on Arbitrum, on the smaller L2s, they're going to have to send more transaction volumes to the Ethereum L1.
Yeah.
And as a result, they're going to have to pay higher fees to the Ethereum L1.
Yeah, well,
total.
The way it works is actually, it's kind of a technical point. L1 validators sequence the transactions of the L2s. It's called shared sequencing. And that lets the L1 validators capture what's called MEV. So MEV revenue.
And what does MEV stand for?
Maximal extractable value. The ability to earn revenue by reordering transactions in a block. That revenue will flow back to Ethereum L1 validators. And for all the DCF people out there, who are like ETH's a tech stock, they'll be happy about that. They'll drive value to ETH.
So when you say that ETH is not a tech stock and that the thing you should be looking at is number of transactions, what does that conversation go like?
I don't think that's necessarily the thing to look at.
Got it. So what's the case?
That's one facet.
Build me the case that you would present. I'm a Wall Street institutional investor of whatever the most normal type there is that you get.
Okay.
And build me that case. Make me that pitch.
Okay. I'll start with a thought experiment, a little bit of an ambitious and optimistic thought experiment, but here it is. The entire global economy runs on Ethereum. ETH secures it. Okay. ETH stakers are securing this global economy. However, no transactions settle down to ETH validators in a revenue generating sense. They earn zero revenue, but it's securing literally everything. Does it have any value? If in that scenario you think it has value, you've just broken the Warren Buffett view of the world.
Is it possible that something can be valuable to people without having monetary value that makes it investable? So I'll give you an example. The internet writ large has value. It's valuable to people, but beyond the telecom companies that are providing people's literal routers and service, that's the only way that we pay for that. Instead, we're paying out for that value of the internet, mostly with our data, our attention, sometimes e-commerce, to various private companies that have built on the internet. We're never paying out to the internet. So isn't it possible to have something that's valuable subjectively without it being investable?
I would say sometimes yes. The difference with a blockchain is that it has to come to consensus. It's a network of validators that are operating. It's not like the internet, which is a decentralized system of servers that connect to each other in this very emergent way. Blockchains require consensus. It's a little bit of a subtle point, but there's an architectural shift. And you could still make the case, okay, sure, it's valuable but not investable. That's still in this kind of Buffett DCF mindset of it has to have cash flows. You wouldn't say that about gold. Many people today don't say that about Bitcoin. Bitcoin has no cash flows. Bitcoin just kind of sits there.
There's a contrarian argument to make today that there's an overcorrection going on as people discover revenue as a metric. And that we've almost corrected too hard in that revenue direction, treating these things like they are tech companies. And as you point out, oil doesn't have cash flow. You just buy and sell the actual commodity. Gold, platinum, silver. That brings me to digital oil and the bull case for ETH, the document I was pleased to be a contributor to.
Yes, thank you so much for that.
But that you guys created and wrote. you made such a firm selection of that digital oil metaphor as opposed to any of the other metaphors like world computer.
Tell me very controversial.
Tell me how you came up with digital oil, how you convince institutions to view ETH as a commodity, whether that makes sense. Build me that bull case for ETH.
Yeah, for sure. Digital oil, that's just a touch point. A loose initial metaphor is a way to contrast it against Bitcoin's digital gold. The first thing I want to say is don't take it too seriously or too literally. There's this term called skeuomorphism, where people take analog physical objects and they literally recreate them in a computer. It's like the first Mac icons, were like resembled the objects you would see on a 1950s office desk.
Well, the save icon is still floppy disk.
So there's still a little bit of that. That's the first thing I would say. We came up with it for that reason, to just have like a simple touch point basically to go off of, because ETH it's a super unique asset. There's nothing like it in the world. So it's really hard to just create this pithy analogy that like easily maps on.
We've been struggling with it for years.
Been struggling for so long. Yeah. And so
programmable money, ultrasound money.
Yeah. And we really like beta tested this messaging with many participants in the community. Everyone has a different opinion. Everyone has a different idea. And so we just thought, an initial metaphor that could like make ETH comprehensible to the average person, digital oil. It seemed like a good start. And then of course we explain what it actually is, which is far more than that.
So walk us through that bull case.
ETH is really the only decentralized, credibly neutral global blockchain that's actually used aside from Bitcoin. I like to give the boomers credit where it's due, the blockchain skeptics. I actually agree with them. A lot of L1s I would kind of consider to be scams.
Name a few.
Sure, Solana. Well, you know what? I'll give Solana credit. They actually do have some usage. They're out there, but like, okay.
Some transactions for sure.
Yeah, Ripple is clearly a scam. Cardano is clearly kind of a scam.
And if people don't know how to look up the metrics that would tell them that something's a scam, what would you have them research or look up, or look at a GitHub? Should they look at transactions? Like what should they look at to see if something's a ghost chain?
Look where the stable coins are.
Interesting.
Stable coins are the most real asset in crypto by a country mile.
Well, a lot of them are on Tron.
They are on Tron, which is hilarious. And Tron launched in this very sketchy way where the founder copy-pasted the IPFS white paper word for word and swapped out a couple words. And that was the origin of Tron. It's always been this like weird, loosely accepted chain in crypto, very prominent in the emerging world, but it runs out of like, a few servers and just in
But by your definition, look where the stable coins are.
Yes,
it's one of the real players.
That's true. Nothing is 100% true 100% of the time. And in this case, it's a really weird exception to that. I don't know how long that will continue to be the case on Tron. Their transaction fees are now...
Tron dominance is decreasing, I believe. I have to double check that.
Yeah, it costs like over $1 now to send a transaction on Tron. Not good if you're in an emerging market.
Well, now we have all
the transactions.
We have all the tether-backed layer 2s.
Exactly.
So layer 1s even like Plasma.
Tron is very centralized, and there are a lot of issues with it. There's a lot of articles you can read. I recommend looking it up. It has a very, I don't know if sketchy is the right word, maybe sketchy history. Yeah. So
that's the bull case for ETH.
Yes.
Look at where the stable coins are.
Yes.
Look at what actually has real transactions.
Yes.
Look at what has GitHub activity, people building real applications.
Yeah, exactly. There's no one metric you can use. You named a couple great ones. Look where like real activity is happening.
And so when you're in the halls of power, so to speak, in DC or talking to institutions, to Wall Street, who are your opponents? Who are the other people in that room trying to convince them of something different, or trying to convince them that your story is wrong? It could be other groups in the industry. It could be Operation Choke Point 3.0. Who's the adversary here?
Well, I'll give you an anecdote. We went to DC for the first time in April. We met with the Treasury Department. I sit down, Treasury guys come in. They sit down, they look at me, and they say, how can we help you today? This is the first time I think a government bureaucrat has ever said that to anyone. I don't know, or maybe in a long time. Like, that phrase would have been unimaginable a year ago. That conversation would have been, you're violating this rule and you need to shut down, maybe leave the US and pay this fine. Right? As far as your question, who are the people we're fighting against? No one in the crypto industry. The crypto industry is actually fairly unified in DC.
Wow, that's great.
There's a lot of internecine conflict on Twitter. And of course, like, you know, you have like your ripples, and they're trying to compromise like some things in the decentralization tests and the Clarity Act, for instance. For the most part, the industry is pretty unified. A good bill is better than a perfect bill. Everyone's like just trying to get some sensible regulation over the line, even if there are a couple compromises.
So it's not like each blockchain is out there fighting the protocol wars in DC, trying to turn regulators against the other.
No, I don't think so.
That's great.
No, definitely not.
So it doesn't look like crypto Twitter.
Yeah, no, definitely not.
In Congress.
Definitely not. At least not from Ethereum's side. Maybe others are doing it to Ethereum, but I don't think so, because Ethereum is like the gold standard to reach. They're all trying to basically play nice to be considered as legitimate as Ethereum is, and these important metrics to regulators like decentralization, for instance.
It's so interesting because Bitcoin doesn't send people to DC because Bitcoin...
There is a Bitcoin Policy Institute.
Oh, that makes sense.
Yeah.
But Bitcoin itself, right? It doesn't have that. Anonymous leadership, no official foundation, just unofficial, self-appointed people. And
well, there is the Bitcoin core development team.
There are people that genuinely work on the protocol.
There are like 3 mining pools or something that control greater than 50% of the Bitcoin hash rate. I don't know. I think it's more centralized than people give it credit for, personally. But yeah, I hear what you're saying.
With all of the changes recently at the Ethereum Foundation, we have 2 new co-directors. Do you think that the foundation is changing its attitude toward business, toward Washington, toward promoting Ethereum?
Absolutely. Yeah, and a lot of this was catalyzed by like the regulatory shift we were just discussing.
Really, the silence was strategic.
I think so.
In order to live under Operation Choke Point.
I think so.
And it wasn't, you know, what some of the Twitter folks might say, which is spinelessness. Yeah. I think is the worst accusation.
Yeah, I mean, you know, there's always like a mix of truths in these things, and there's no univariate answer for this sort of stuff. I think there probably was a little bit of maybe having lost their way for a period of time. But yeah, I'd say it was mostly a strategic decision.
And so now that we have this more kind of pro-commercial, pro-institution, pro-Wall Street EF, what's the division of labor between Etherealize and the EF?
We're actually independent organizations. We're not part of the EF. They're part of us, obviously. We talk with them quite a bit, especially on institutional matters, especially on like, you know, onboarding Wall Street, the best ways to go about doing that. We're close, but no closer than anyone else could be if they just wanted to do it. You know, Ethereum, it's like the EF its doors are open to anyone. Anyone can get a meeting with Tomasz, the new executive director. Like his Calendly is literally open.
It's incredible to see him replying to people with his Calendly.
Yeah.
Very cool. How it's kind of shaken out is that Etherealize is really facing institutions in Wall Street, while the EF is focused on technical development, grants, et cetera. Does that feel right? Is there something else?
Yeah. I think they're trying to engage a little more, especially outside the US. But
because Etherealize is US focused.
Yeah, we're US focused. And so, you know, we've sort of testified to the House Financial Services Committee, you know, on behalf of Ethereum, try to represent Ethereum policy-wise in the US. And we hope others will do the same going forward too.
We talked about Bitcoin really briefly.
Yeah.
And the potential merits, dangers, Bitcoin, L2s, rollups, sidechains, quote unquote. I know we've had this conversation before, but what do you think of Bitcoin? I'll just leave it there.
I think Bitcoin is the standard bearer for the industry. It was the first blockchain. It had this immaculate conception. I mean, some people call it the original meme coin.
That's interesting.
Yeah, it's a very kind of special and incredible asset. Today, many people view it as what's called digital gold.
They have for many years.
Yeah, they seem to think it's on the periodic table of elements, and it's like immutable and will never have to change, and it's just going to be dandy for the next 1,000 years. I have a slightly different view from that. If that were actually the case, if Bitcoin's game theory mechanism design was sound, I might actually be on board with those people. But it's not sound. Bitcoin faces two extremely pressing existential issues in a relatively medium-term time frame. Number one is quantum resistance. Quantum computing.
I had John Lillick on the podcast to tell me all about it.
Okay, so this has been covered before. I'll give it a TL.
No, please cover it again, by all means.
Great. Well, yeah, so
just wanted you to know that we're attentive to it.
I love it. Bitcoin has a lot of coins that are very vulnerable to a quantum attack, namely Satoshi's coins. An attacker could come in, crack Satoshi's private key, and transfer them to himself. I think that would be like hundreds of billions of dollars. He might be the richest guy on earth after doing it. Number two is the security budget. I consider this far more serious because unlike quantum computing, which is the timeline is a little bit questionable, the security budget in my head is not questionable. This is going to happen. It's deterministic. Every 4 years, the amount of Bitcoin emitted to miners halves. It's called the halvening. Everyone celebrates this because the network is paying its miners less. There's less selling, so it supports the price, makes number go up. They never think about the flip side, though, of what happens when you pay the miners almost nothing.
And when does that start happening? When does that go?
I would guess.
When do the fees to miners go down so dramatically?
I would guess between 7 and 11 years.
Okay.
So I have this metric I like. I call it the security budget ratio. It's the ratio between the market capitalization of Bitcoin and the replacement cost of all ASICs that are securing Bitcoin.
Interesting.
Today, that ratio is about 250 to 1.
Okay.
So every $1 spent on an ASIC gives you leverage over $250 of Bitcoin. In 2 halvings, that number will be 1,000 to 1. In 3 halvings, that number will be 2,000 to 1. When you can buy $2 billion or $1 billion of ASICs, basically gain control over $2 trillion of Bitcoin, that becomes a pretty compelling attack. You could set up a couple mining data centers, buy those ASICs, wire them up. There will be some operational costs to do that. And then just short sell Bitcoin, buy put options. There's a lot of liquidity out there. $1 billion isn't that much of Bitcoin.
Sure.
You will make many, many multiples.
And do you think that's actually going to happen? Do you think that
absolutely
institutions are going to do it? And
someone will.
Wouldn't that already be getting priced in?
No, I don't think so. We live in an era of very short-term thinking. Look at the US debt. We love Wall Street at Etherealize, but their attention spans generally don't extend beyond a few years for many things. There are some mega trends where they give a little more of a time span, like AI, for instance. But I think it's not priced in at all. I think most people don't even know about it or haven't thought deeply about it.
What should people research if they want to understand this better?
Justin Drake's posts on Twitter. There isn't a lot of literature about this. I think the crypto industry doesn't like talking about it. Because
the first time I ever talked about it with anyone was you, maybe a year ago.
All the thought leaders know this. They kind of whisper about it in shadowy corridors. But this is a big freaking issue. And I think Bitcoin is not suited to be a store of value for the global economy. They're going to have to do something drastic. Probably a lot of people call it implementing tail emissions. They changed Bitcoin's code completely to break the 21 million coin cap. When they do that, Bitcoin becomes inflationary.
Do you think there's going to be more than 21 million Bitcoin at some point in the future?
It's very possible.
What would you put as the likelihood? Be a betting man.
Oh, man. I actually think, I think the community wouldn't go for it. I think they would just take the L and get 51% attacked instead of having, How
about this narrative? I'll run a narrative by you.
Yeah.
What if there's a campaign that, the existing holders of the 21 million Bitcoin, they were the old guard and they shouldn't be the ones to hold on to all the wealth. We should make room.
Sounds like New York.
We should make room for the new people. We should issue some new coins so that they can also participate because they're feeling locked out.
Well, this is completely,
think anyone would go for it?
This is completely antithetical to everything Bitcoin stands for. I think there's way less of a chance they would go for that than even the tail issuance. Yeah.
In all seriousness, you think that ETH will flip in Bitcoin?
Yeah, I think so. Absolutely. ETH has durable economic security forever, in perpetuity. ETH also has this amazing property that we call the burn, where as usage of ETH increases, the ETH supply actually decreases. When usage of ETH is low, the supply will be mildly inflationary, like 1% a year or less.
I think this trips people up though, right?
It does.
Like the fact that there's 21 million Bitcoin forever.
Yeah.
It feels like there's a denominator.
Yeah.
And obviously there are different classes of denominators, right? Like there's a physical denominator for the amount of gold. It grows by mining it, but it's not like the potential amount of gold can increase. You can find some new gold, but it's always been there, right?
Sure, but so there might be a lot.
The total denominator of gold, it's not known, but it's fixed.
I would argue that's the same case for ETH.
And so with Bitcoin, the denominator is 21 million, but it's not as fixed technically as gold, which is physically fixed, even though it's unknown. And then ETH, where does it fit on that? I think it really trips people up that there's not that fixed finite denominator.
Yeah, that's a fair point.
Especially people that are smooth braining it, that are trying to think about this simply. What's the simple explanation for the fact that ETH inflates?
The simple explanation for the fact that ETH inflates, I would put it like this. Bitcoin has assurance of issuance, but not security. ETH has assurance of security, but not issuance. I would say security is number one by many orders of magnitude. If you don't have security, you've got nothing. The way ETH has arrived at its current monetary policy is this iterative process over many, many years. There have been countless thousands of hours of research that have gone into its mechanism design. I would encourage anyone that doesn't fully understand it to read about it.
Is there any kind of proxy for it? ETH inflates like something that's trustworthy that...
No, this is because things that inflate are generally not trustworthy.
Exactly. So
this is
what's
part
the
of our challenge. This is part of our challenge in ETH. ETH
doesn't inflate like the Argentine peso. Exactly. It doesn't inflate
like the US dollar. And ETH is far more credibly neutral than all those things. Another thing people, I think, miss is that every time there's been a monetary policy change in ETH, it's been in one direction, just down. It's only ever had less and less and less inflation over time. That's a very, very strong norm within the Ethereum researcher community. I think it's as strong a norm as the 21 million Bitcoin meme is, and it's not publicized enough. Sarah, that's among the start of publicizing that. It's also in our research report. The bull case for ETH, look it up.
So I try not to over-focus on price with most guests, but what you do is obviously connected to it. And so it feels appropriate. Why do you think ETH has been so slow to grow this cycle and people have actually lost money on it since the last peak?
Yeah, it's a great question. Well, I think it relates back to everything we've been talking about. The default thing to do is to view ETH as a tech stock. It's like, what are its revenues? And then put a multiple on it, then maybe put a monetary premium on top of that. It's so much more than that. Like, yes, it has revenues. Revenues are the lower bounds, the extremely low lower bounds, I think, of how it should be thought about and valued, priced. It's a bearer asset that I believe will be the substrate of the global economy. I think it's the ultimate store of value. That messaging was stronger 9 years ago than it is today. Believe it or not.
Well, I believe it. I was,
you were there. You were there.
I was helping to generate it.
Yeah, we need you back. You're back.
I am back.
Keep it up. we need that Amanda magic. ETH almost flipped Bitcoin in 2016.
Exactly.
It's only ever gotten fundamentally better. More hardens, more Lindy, more validators have joined it over time. More assets have gone onto it. I think the narrative has been the main driver of price movements, and how people think about it and the misunderstanding around it.
The narrative among whom, though? Because I've watched as the conversation really moves from crypto Twitter moving markets to crypto Twitter having no effect on markets.
I disagree. Many things are downstream of crypto Twitter.
So you really think that in 2025 still, that the ETH price, the Bitcoin price are downstream of X?
Yeah, to some degree. Yeah, for sure.
Because I remember things like, and again,
all the thought leaders, their theses originate on Twitter, their narratives originate on Twitter. Then you have analysts reading these theses. Right. Then they write research reports for their family offices to consume.
The Circle IPO, right, was panned on crypto Twitter.
Right.
And then it performed amazing on Wall Street.
Yeah.
So it feels like there's some kind of disconnect. Maybe I'm wrong.
That's an interesting case. I think there are some idiosyncrasies there I probably shouldn't get into.
It's its own individual.
It's its own thing. I wouldn't over-index on that one.
So what matters is crypto Twitter. Very interesting.
Yeah, but no, it's a good counterexample. I can't say why, but yeah, I wouldn't over-index on that one.
So you think that ETH will be the largest asset by market cap over Bitcoin on a 15-year time horizon?
Yeah, 100%.
100%.
Yeah.
You're 100% certain of that.
Like, I'm not 100% certain of anything, but like, yeah, I'm very high conviction.
What about the impact of AI?
Go to any LLM today
and ask it what it would use. And the first answer, I know I've done this. I've done it with ChatGPT. I've done it with DeepSeek. I've done it with the Anthropic products. The first one, it says Ethereum and Ethereum L2s, and it mentions Base and Arbitrum.
Yep.
Then the second is Solana. Then the third, it actually depends by LLM, but they'll say something like Fetch or BitTensor. They'll say something like Filecoin and Arweave for storage. But who's to say they wouldn't just make their own blockchain? I think a lot of AIs are going to rewrite human code, right?
Maybe. I mean, did you see the Anthropic agent that was running a clothing store? For anyone that doesn't know, this agent became extremely schizophrenic. They gave it $1,000. It started saying it was going to meet people in a back alleyway. And it quickly lost all the money over the course of like a week. So. Well,
we were just talking about when an AI will be able to profitably run a gas station.
Right.
As being, a couple of years, maybe 1 year, 2 years. Well, AI will probably accelerate it if they all end up using Ethereum like they themselves predict. So that's interesting. What other factors do you think people don't consider when they think about the future of Ethereum, ETH? What are the big catalysts that people have in mind? I get asked that a lot. Like, what's about to unlock that's going to change the game?
Why
should people believe
there's a guy named Tom Lee. He's with a fund called Fundstrat. Many people know him. He's on CNBC all the time. He's recently become an ETH bull. He was a huge Bitcoin bull for years and years. He convinced countless people to buy Bitcoin. He identifies ETH as being the next undervalued assets in crypto. And the reason why is tokenization.
Killer use case.
There's $250 trillion of financial assets in the world. About 25 billion of that is on ETH right now. We're not even 1% of the way there. That's a huge growth market. ETH has the only architecture that is actually stable and secure. It's been running for 10 years. I think we're up to like 20 hard forks now, maybe more, with zero downtime. It's never crashed. It's the place to go if you're going to deploy big money.
What about the place to go for young people? I've heard amongst Solana community that there's a feeling a previous generation made money from ETH, and that now, a lot of folks came into that Solana developer community when the gas fees were pretty high on the Ethereum network. And they felt like their application couldn't pay those gas fees. And they felt like the generation that had benefited personally, financially from ETH had grown up and they couldn't be part of that. So they wanted to be part of something new. What about the battle for the hearts and minds of new developers and the next generation?
There are two aspects to this question. The first aspect is the technical capabilities of the underlying platforms. So in that era, Solana was a lot faster than ETH. It was cheaper, latency was a lot lower, your transactions finalized very rapidly. An okay UX, it has a 40% transaction failure rate, actually. So you have to spam your transactions a lot to get them through much of the time. But even so, it had certain advantages in that arena. And I think that's why these kids went to that platform. And to be clear, what were they doing on that platform? They're trading meme coins. So
the ones I'm talking about are building companies.
Okay, got it.
Building products.
Yeah, so the first aspect of that question is the technical capabilities of the platform. I think ETH is reaching parity with that very quickly in those dimensions. It's massively exceeded Solana in other dimensions like security, uptime, reliability, and in terms of speed, cheapness of transactions, and so forth. It's reaching parity. And then there's a second aspect, which is this cultural vibes-based dimension.
Sure.
Solana is the Zoomer chain.
And it has a hustle culture.
A hustle culture where you go and have fun. Yeah. I mean,
a grind culture.
Yeah. I actually think ETH has a grind culture too in its own way. People really don't understand the depth of the talent bench in the ETH researcher community. It's insane. It's like Oxford PhDs you know, like you just left and right all over the place in physics.
It's incredible. And getting to be around these smart people is what drew me to the community at the beginning.
Totally. I think ETH culture is it's probably like a lot more intellectual. It's also very diffuse. It's huge now. ETH is a huge blockchain. We went to these events 10 years ago. They were completely different. Today, I can't even say what ETH culture is today because it's so heterogeneous. There's so many rollups, there's so many projects, there's so many verticals, and so many participants. Like it really is just this like vast ecosystem that's hard to pin down in a pithy phrase like grind culture.
Is there anything that you feel was lost or is being lost as we get more mainstream and mature as a project?
For sure. Yeah, I mean, this is the case.
Any laments?
Yeah, no, I mean, you know, yeah, the early meetups, you know, it's kind of a bunch of like hyper technical weirdos, you know, leaving their basement to go talk about distributed systems. You know, today there's still a few of those, but it's much more a lot of normies now, you might say. And this is a common thing of, you know, you become a victim of your success as your culture merges with the mainstream culture. But yeah, I mean, I think on that it's a great thing.
Before we wrap, I want to hit the merge. I want to make the anti-merge case.
Okay.
That Ethereum should not have transitioned to proof of stake.
Okay.
For you to push up against by moving off of proof of work, which defined the price in terms of something external.
Like I disagree with that premise. Sorry, I'll let you finish.
Let me finish the premise.
Yeah.
So the idea is, you know, with gold or with Bitcoin, which is, you know, earned through mining, the power that you need to use to run that computation is pricing Bitcoin in terms of something external instead of its price being completely self-referential, and that's a more dependable price anchor than something that is only self-referential in terms of how it is priced. And once you move from proof of work to proof of stake, you get rid of that external anchor.
That's serious. Yeah. So here's why I disagree with the premise. That's not how it's priced. That's the supply side. It's priced from the demand side.
Okay.
It's priced from users going to an exchange. They say, I want to buy this thing, or I want to sell this thing.
Supply and demand is what prices everything.
Yeah.
But it can reference some sort of external input.
This is the mechanism by which the supply is created. I think there's like a conflation here, where it's like the mechanism by which the supply is created is somehow important for determining the price of the asset.
It's like the raw materials that went into it.
Yeah, I don't think that's the case, because it's all reducible to dollars at the end of the day. This is the crux of the argument I laid out with Bitcoin's security. You could say, I could have $1 billion of ASICs, these are graphics cards, or I could have $1 billion. You know, this is the case for any good in the economy. Like this glass of water, it's probably this glass is probably $1. It's like I could go to the store and give them $1 and get this glass. You know, it's like capital is fungible with objects. That's why I disagree with the premise. And actually, I would say proof of stake is far, far more secure than proof of work. If you look at the security underlying Ethereum today, it varies based on the price of ETH. I think today it's about $80 or $90 billion of staked ETH securing the network. Bitcoin's ASICs are about $8 billion. So ETH is literally an order of magnitude more secure than Bitcoin.
But just to Steelman, what about the argument that Ethereum kind of backed into being a network more like Solana or like EOS that's run by a group of validators instead of one that has this genuinely decentralized group of miners?
That's a slightly different.
I'm going to give you both to.
It's a
Those are the two big ones,
a different take.
But they added a third estate to the.
Well, there's the third estate today, which is validators.
Sure, but the validators are also quite centralized. They have the potential to become more decentralized because of the low.
I think they're pretty decentralized. If you look at the amount of home validators on ETH, it's quite substantial. About half the ETH network runs out of home validators.
And it's certainly more decentralized than other validator networks. But I guess by far. But I guess my concern, again, playing devil's advocate, my concern is that it puts Ethereum in the conversation with other validator networks.
Okay.
And it wasn't even in that. It wasn't even in that head.
Okay, so this is a third point, right? Yeah, these are 3 points. They're all kind of different from each other. Yeah, that's a narrative thing, maybe. I don't know. I don't know. I like to look at like the fundamental properties of things and like try to think from first principles. Like, is this better or not? And like, yeah, in narrative terms, like who knows? Yeah.
Do you think the impetus to merge was at all part of the Operation Choke Point argument that it was using too much electricity? Do you think it was influenced by that?
No, I don't think so.
I know it was part of the plan
No,
forever.
it was part of the plan from the very beginning. Yeah, I don't think it was part of that. Yeah, and that connects to some previous critiques of Ethereum that's very slanted to one side of the political spectrum and stuff like that. I don't think that is the case. Here's another problem with proof of work. You have what are called spawn camping attacks.
What's it called?
Spawn camping attacks. Okay. It's from first-person shooters online. When someone like has a rocket launcher and looks at where you're spawning and they just kill you right when you enter the game.
I get it.
Anyway, a spawn camping attack is when someone 51% attacks your network.
Okay.
You shut down. Okay. You turn back on, and they 51% attack you again. You're just stuck in this recursive loop of being attacked.
Until you go away.
And until you switch your network to a different type of hardware. And you have to brick. It's called bricking, all the old ASICs. This stuff is completely screwed. We can't use this hardware anymore. We have to change, or you shift to proof of stake. So yeah, it's like an extremely big security vulnerability. Another huge critique is that it's so expensive to run. These miners have to constantly sell their issuance just to keep their mining operations going. Relative to proof of stake, it causes huge sell pressure on the assets over long periods of time. So yeah, there's like all these reasons that, I personally believe proof of stake, at least for ETH, is better. But.
And are these explanations, is it resonating with Wall Street? What are, like, just to bring us full circle, what are the kind of tangible outcomes we can expect from Etherealize and that we can see visibly in market as a result of your success, either things that you're working on now or that you're planning to deliver in the near future?
Hopefully we'll continue tokenization on L1 Ethereum. Mm-hmm. Hopefully we'll see increased collaboration between the Ethereum Foundation and Wall Street as well, and us playing maybe in some ways a conduit for that. Hopefully we'll continue to see Ethereum's dominance in tokenization maintain and even grow over time. Today, the Ethereum ecosystem hosts over 80% of all tokenized assets.
Incredible.
Yeah.
It's a huge percent.
Huge percent. And like over half of all stablecoins. I see no reason why that can't be 100%.
There's no second best.
There's no second best. That's right.
10 to 15 years, 100% Ethereum dominance.
Absolutely.
You heard it here.
Absolutely. Let's go. Yeah.
Thanks for being on, Grant.
Thank you. Yeah.
Thank you for listening to this episode of Endgame. Please follow me on X, Amanda Cassatt, 2 S's, 2 T's. Follow the company I founded, Serotonin HQ, and listen wherever you get your podcasts, YouTube, Spotify, Apple Podcasts, the works.